China's financial system is quietly dealing with a major crisis. Although some of the activities are disclosed, they are underreported and largely downplayed. This is an attempt to prevent the eventual failure of the current financial system as it rots from the still lingering problems first highlighted in 2008. No country is immune, no domino will be left standing. You came here for the truth, so let me unveil that for you. Today we're going to talk about China. It is very important to follow the situation that is going on in this country right now. Of course, we see the geopolitical tensions, we see the tariffs, we see the back and forth that is happening between China and the US. That's very important, but there's another level to this, and we need to go deeper into it to really understand what's happening in China at this time. As I said in the introduction, some of the information is reported, but you got to start connecting the dots to really understand what's going on. Let's begin. This particular bank is now the third case of nationalization since May. Understand what's happening here. In 2019, 3 banks have failed in China. Now, you might say, well, there weren't failures. The government just took them over. Well, that's the way that I perceive the information. If the government didn't step in, they would have completely collapsed. This, as far as I'm concerned, is a rapid deterioration of the situation in the financial system of China, but it's no different than what we've seen in many countries around the world. Look at the United States as a prime example. You can also say the same thing for Northern Rock, but look what happened. People lined up, the bank runs occurred, and yes, people were saved, they were rescued, but ultimately what happened to that institution? There's no difference between that and MF Global and so many others that have gone down the drain for one reason or another. The purpose here is just to highlight the underlying fragility that is present that most people do not consider. They say it's insured, my money is safe, I don't give a damn. Well, that is truly unfortunate because those who remain ignorant will be facing the music at some point. Valuations of the world's biggest banks sink to record lows as China's economic and debt pain spreads in the trade issues aftermath. We've seen this going on now. Every single month it is increasing. It's getting worse instead of getting better. The stock market is starting to care a lot less about this. However, if you can see beyond all of the garbage news that you get on a day-to-day basis, underlying all of that is the fear that's present. And if you look at the EPFR data to track and trace where money is going to and from, you find that more people are fleeing to safety right now. Not the 7 share of Amazon type investor. I'm talking about the big funds, where they're moving their money to. You could see time and time again that they are choosing what they believe is safe or less risky assets. The yield on these is declining rapidly. We've watched the yield curve inversions taking place across the spectrum right now. It isn't just with the US debt. Of course, we are seeing this all over the place. Look at the negative yielding debt that is all across the world, particularly in Europe. When you have $15 trillion worth, this tells you something. This shows the value of money itself. We have a problem fundamentally in this financial system. 2008, we started to see it. We started to unravel all of the garbage, and then they papered over it. Well, you can't do that forever. Of course, that has to come back up. You cannot contain the stink that's there. It will eventually rise to the surface. Industrial and Commercial Bank of China lost $11 billion of market value last week. We've been told that everything is fine, that everything is safe, yet this right now is getting worse. The contagion is spreading, and it's not just China. It's not just Chinese banks that are the problem. No. This is all industries. Right now, I'll show you in just a moment here, they are talking about a global recession that's not going to occur in the future. Some actually believe it is on right now. I'll give you all the details, and in fact, I'm going to show you a Reuters document in the next video I do that is 53 pages, if I remember correctly, chart after chart after chart, showing you the slowdown that is present all across the world. But stay tuned for that one. China's 4 biggest state banks have fallen to an average price-to-book ratio of 0.61 on the Hong Kong exchange, a level not seen since 2016. We are watching right now as all of these companies lose to the value of where they were at their peak. There is no chance in actually fixing this with central bank easing. They're trying to get back to what they thought was this impeccable growth that would persist forever, and you can't have it. It's okay. It's okay to let institutions fail. It's okay to have a contraction of some sort. It's not a big deal. Well, of course, they do believe that there are issues here that can be resolved by their activities, and we know that isn't the case. China's control over its entire economy weakened as Baoshang bank failure starts a domino effect. We have the third bank today collapsing under its own weight. You could point to one issue or another or say, that's a small bank, it doesn't count. Well, that's not the way it works, of course. You look at the details, you look at what's behind all of this, and you start understanding, you start pulling this all back, realizing this is actually a very weak system, a very fragile system that is being held up by nothing else but promises. Promises that will be broken time and time again. In 2008, they said they were going to fix everything. They said they were going to make it right. They instituted these minute laws that were supposed to fix everything. They only made matters worse in the end, because look at where we are today. There's more debt, there's more deficits, there is more corruption and more of a revolving door. Goldman Sachs rules the government. Even Alessio Rastani had said Goldman Sachs rules the world. He kind of shocked the mainstream media with that comment. Here you can see right now, it is not changing, okay? Years and years later, it's not any different. Well, of course, we'll have to deal with this as time goes on. People aren't prepared, and they never will be, and they'll see it after it's too late. China's $40 trillion banking system learns a hard lesson on risk. 2 months after China shocked investors with the first government seizure of a bank in 2 decades, market confidence in the nation's smaller lenders has yet to fully recover. And of course, it never will. They're trying to make everything seem like it's okay. They are there to backstop any losses. They are there to recover the financial system should it fail. But they've been injecting liquidity into this market, into the system, and it just gets worse. They've been doing so since last year at an aggressive level. I've been documenting that, and it has not resolved anything at all. We have watched it even worse today than it was several months ago when we were watching the markets in a state of panic. So what is it then? How will this be resolved? You tell me. I have one idea, but most people aren't ready for the truth. If you look at this historically, just do a search on China injecting money, you will get this. The first 2 right here, back in January 2019, China just injected a record amount of money to stimulate, and directly under that, China's PBOC injects $72 billion to roll over medium-term funds and so on. This is happening over and over and over again, and what is the result of it? Yet another bank failure. They can't stop this. They cannot try and actually mitigate the losses. People are going to get hurt ultimately. That's the way it works. It's not just China. It's not just the US. It's not Europe. This is a global problem. The entire financial system, top to bottom, is interconnected and intertwined. If people don't realize that, you have to look at a company like Deutsche Bank and understand how much of these garbage derivatives wrap around JP Morgan, Goldman Sachs, all of the other big institutions out there. People don't know because they have their heads in the sand and they think, well, I live in this country, so I'm not going to worry about that country. It is really, really foolish to believe that. China has $6 trillion hidden local debt and $32 trillion off its balance sheet. Do you remember I did this video, China's $32 trillion secret? Well, now we're starting to see that unravel. I did this video here. I had another one previous to that, and we watched this financial system that is completely evaporating. I'm going to link to this in the end of this video right now. If you haven't seen it, definitely do, because I get into the details of all that. I show you the documentation. And then I wanted to show you this. It's a conundrum that China is dealing with at this time. You could look at the PPI, and that has been declining here basically since 2017 all the way through 2018, right into 2019. And while this is something that can turn around, we've seen it happen before, more. It doesn't look like that is the case. And unfortunately, for those manufacturers in China, for anybody doing trade, it doesn't look good right now because they are a factory powerhouse. There is no doubt about it. Yes, they're talking about changing the supply chains. They're talking about moving all of this over there, moving it to Taiwan, moving it to other countries, but that takes a long time and ultimately will become more expensive as a result. This right here is what you should be paying attention to. Also wanted to mention the fact that the CPI has grown. While it is in this range over the past few years, as you can see, in the short term, it has increased 1% or more. Now, that of course has a major effect. If they're going to start printing more money, if they add liquidity, if they keep doing this, that puts further and further pressure on inflation. Okay, so you're going to see this rise. And they're trying to save their economy in a way, but they are really dealing with the problem right now because you got to watch out. You're fanning the flames, you're pouring the gasoline, but it's not a good thing in other respects. So they're going to be very careful, I assure you right now. Okay, two more things really quickly. The global economy is probably in recession, with most cyclical indicators showing business activity is flat or falling. Hey, I've been talking about this for a while. I've been pointing to this, saying that there are so many economists out there showing you this. I've then shown you the PMI data. I've given you all of this information already. Now they're starting to touch on it. It's great that it's being acknowledged. This can turn around, certainly, but I just wanted to show you it as of right now. Recessions become obvious only once they are well established, given the lagging nature of most economic data. And end of cycle recessions are usually impossible to distinguish from mid-cycle slowdowns until well after the slowdown has started. Now, this individual here talking about it, they give you the details. In a video that I will do later, I'm going to have to highlight that document out of Reuters. They picked up all this data and I just wanted to show it to you, but there's just something here I wanted to mention. Number one, the fact that they say they don't want to say that they are in a recession because that's going to make everything worse. So of course, this is why they do it. In the last recession, they didn't actually admit it until 12 months after the fact. That's an embarrassment. And as far as I'm concerned, that's manipulation. That's propaganda. Anyway, but almost all of the main economic and industrial indicators that provide a reliable guide to the business cycle confirm that the economy has already slowed severely. Hey, if you've been watching the Money GPS, you know exactly what we're talking about. Global manufacturing surveys, industrial output, new orders, business investment, construction activity, motor vehicle production, and freight volumes are flat or down compared with a year earlier. That's what you will see when you look at the actual charts, when you look at the actual data. It's down, down, down. The only thing that has been up has been a handful of stocks, and they have certainly done well, whether it's Microsoft, whether it's the FANG stocks. You are looking at these very strong performers over the last while. There's no denying it. And then I wanted to finish off with this. Steve Eisman says Hong Kong protests are his biggest worry with economy, a possible black swan. Now, personally, I don't think black swan is the appropriate term in this case here, but regardless, he's just saying that what's occurring right now could be a catalyst or a trigger event. That is certainly possible. We've seen it growing and growing and growing. We've seen China really lashing out and saying, you better fix this right away, Hong Kong, or else we're going to step in. I would watch this also very closely. You can see geopolitical tensions that are rising globally around the world, and this could really create something that is unbelievable, something that we haven't had for many, many years, and it's not a good thing. We're talking about major, full-scale, you know what, can't even say it. That's all for this video. If you want to support this channel, hit that thumbs up button. That's all you got to do. Hit one button, show your appreciation. Thank you very much. If you want the financial education you were not taught in school, these two books have everything you need from top to bottom, from A to Z. All the foundation, the history, the asset classes, talk about US and China's relationship in here, so much more. Check them out. Link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to see that video about China, then watch it right here. Click on it and I'll see you over there.